Stock markets across Europe are trading sharply higher this morning, with the UK's FTSE 100 index currently up around about 45 points. The Euro Stoxx 50 index higher by 25 points. The DAX in Germany up around about 93 points. US stock futures are also trading higher. The Dow is currently up around about 42 points, and the S&P 500 up around about 3.75 points. So good start for stocks and stock futures, cash and futures index. And when it comes to other asset classes, the dollar is a little weaker against its rivals. Risk currencies are outperforming. The euro is trading a little higher. Bonds are not in favor at the moment at all. Gilts are down around about 37 ticks. And German bunds are also lower as investors increase their appetite for risk. And when it comes to commodity prices, gold is currently down about $10. And oil prices are also receding. NYMEX and Brent futures are off around about 50 cents. Brent is sitting at about $113 per barrel at the moment. Good morning, I'm Ishaq, Siddiqi, and welcome to your Daily Market Bite. Let me give you a quick idea of what's going on across the globe. So we've had some positive developments overnight, both on a number of fronts. First, let's start off with one of the big drivers of the upside across global markets. Of course, is the recovery that we're seeing in a batch of Chinese economic data. Overnight, we had industrial production, retail spending, and investment data all out from Japan, all increased very strongly, suggesting that the Chinese economy is finally turning a page. Had a very turbulent start to the first half of 2013. However, growth is back on board. It seems like Chinese policymakers, they had a plan to implement measures to turn the country into more of a consumption-based economy as opposed to a spending-based economy, which it previously was. Now the market is very worried about that. We start seeing growth fall off a little bit, and worries that growth for China in 2013 will be below 7% on the GDP rate. However, policymakers have reassured markets and said that growth will remain above 7.5%. So it's quelled a lot of the worries in the market that China is slowing down. It isn't. It's starting to pick up again, and that's been very good news for the market, particularly at this time now, considering that we have the potential of some Federal Reserve taking coming ahead, possibly in September, if not, then maybe in October or November. So that's kicked up the risk sentiment. It comes a day after we had a pretty good data from China on the inflation front and also on exports and trade. At the moment, resource shares are tracking higher on the back of that in Europe. Now, other developments that must be noted, of course, the geopolitical tensions that we've seen regarding the US military strike in Syria. Now, there's been two developments on that. One, President Obama isn't finding it that easy to get congressional support. Now, he put his proposal out to US Congress, reconvened yesterday, and lawmakers in the US are attempting to delay this proposal, and there's a number of reasons. One, the US don't really have that sort of defense spending that they used to have at some point. The sequester cuts have sapped the amount of money that the US have when it comes to putting funding for defense. So when it comes to any sort of military strike, the US really has to consider if it's worth doing so. It's not boom time for the US economy, so lawmakers are having to struggle with the fact that the US is now currently having to deal with a lower capacity arsenal, if you want to put it that way. At the same time, they have this debt ceiling talks sometime in October, where they have to lift the debt ceiling again, and that means that they have to prepare a new budget, which is a lot more work for lawmakers. And then on top of that, we also have the appointment of a new Federal Reserve chairman for next year, something the lawmakers will also have to put into consideration. So there's a number of issues out in the US government, with lawmakers divided on the matter of Syria at the moment. They've got a bunch of domestic issues issues that they're dealing with. So the last thing they need is to really consider what's going to happen with Syria at the moment. Although it is a threat, lawmakers are a little too concerned right now with more of the domestic issues in the US rather than President Obama pressing ahead with a strike in Syria. So they're delaying that, and that's becoming quite difficult for President Obama. It's undermined his plan. And at the same time, on the Russian end, Vladimir Putin has put out a proposal for the Syrian regime headed by Bashar al-Assad that he hand over chemical control to the Russians, all control of chemical weaponry, and the US have responded to that by saying, okay, if you do that, we'll hold any imminent airstrikes. So there are some receding fears in the market that we aren't going to see a strike on Syria just yet. So investors are taking the opportunity to really just bring on the risk and build some exposure before anything else happens. And when it comes to the European session, we're really just bouncing on the back of that. We don't really have much on the economic data play, very thin on the ground. We're really looking ahead to some of the data points coming out for the rest of the week. We have UK jobs numbers out tomorrow. We have on Thursday the jobless claims figures out from the US, which should be a bit telling when it comes to the Federal Reserve tapering activity in September, or if it's not going to be in September. And we also have the University of Michigan report out on Friday. That is all for your daily market bite. I'm done. I'll speak to you guys tomorrow. I'll give you an update on what's going on then. Cheers.